on these problems. So the first problem I have here is one where we're going to do journal entries. And for the first journal entry, they've already entered the date for us, so we don't have to do that here. It says January 22nd. It says performed services for customers on account, $7,500. So can somebody tell me what is the name of the account that you think will be the debit entry here?
Accounts receivable.
Yeah, good. Because accounts receivable is an asset. An asset account goes up when we debit it, so that would make sense. So in the debit column, I'll put $7,500. And then what's the name of the account that we're going to credit?
Service.
Yeah, service revenue. And revenue accounts go up with a credit, so that makes sense. And then at the bottom, we put performed service for customers on account. Okay, then received cash on account from customers, $8,000. So cash is an asset account that would be going up, so we can debit cash, $8,000. And then what's the account that we're going to credit here?
Service revenue?
I don't think so.
Accounts receivable.
Yeah, accounts receivable, I think. Yeah. So they're making the assumption that this may be. Well, we've already recorded previously the service revenue for this. Now they're paying off their accounts receivable. So accounts receivable is an asset. It goes down with a credit. And at the bottom, received cash on account from customers. Okay, received a utility bill, $220, which will be paid during February. So this is similar to an example that we had during the lecture. So the account that you would debit would typically be the expense account. So utilities expense, $220. And then the account that we credit, they have an account called utilities payable. As I mentioned before, if they didn't have an account called utilities payable, then we could use accounts payable. But here, it's better to use utilities payable. That's more specific. And at the bottom, received a utility bill due in February. Okay, then paid monthly salary to salesman, $2,500. So we normally will debit the expense account. So we'll debit salaries expense, $2,500. And then we'll credit the liability account. Oh no, we actually paid it in cash. I was thinking it went into salaries payable, but we didn't. But we actually paid it in cash. So cash is an asset account that's going to go down. So we will credit cash to show it going down, $2,500. And then at the bottom, paid monthly salary to salesman. Okay, then received $2,310 for 3 months of counseling service to be performed starting in February. So this is like the example in the lecture where we said that we can't count this as revenue because we haven't earned it yet. We haven't provided the counseling services yet. So instead, this is going to go into a liability account. So we received the cash, so we can show cash going up with a debit. 2310. Then the liability account would go up with a credit, and so that would be the account called unearned revenue. And at the bottom we put received 3 months consulting services in advance. Okay, then cash dividends of $950 were paid to stockholders. So dividends goes up with the debit. So we will debit dividends, 950. And then cash goes down with a credit. So credit of 950 to cash. And at the bottom, payment of cash dividends. Okay, next problem involves office supplies. First it says on March 15th, purchased office supplies on account $3,400. So office supplies is an asset account, so it goes up with a debit, $3,400. And it says on account, so accounts payable would be a liability account that would go up with a credit. And then at the bottom we put purchased office supplies on account. Okay, then on March 28th we paid $1,800 on account. So we paid off some of the accounts payable. So if initially we booked the accounts payable by crediting it, now to show that we're paying off some of the accounts payable, we're going to want to debit accounts payable. The liability account goes down with the debit. And then this will use up some of our cash. Cash being an asset account, it goes down with the credit.
Isn't it 1,800?
Oh, yes. I was looking up at the first journal entry, I guess. 1,800. Thank you. Okay, and at the bottom, paid cash on account. Okay, now we're going to do the T accounts. And so, looking at the first journal entry, there was a debit to office supplies of $3,400. So I find the office supplies T account, and on the debit side, I put $3,400. And the date we put next to it, so the date for that journal entry was March 15th. And then the other side of that journal entry was accounts payable. So I find accounts payable, and that would go on the credit side, $3,400. And then remember, if we're putting a credit in the account, the date also goes on the credit side. So over on the right side, I'm putting the date March 15th. And then our second journal entry, there was a debit to accounts payable. So finding the T account for accounts payable, again on the debit side, we put $1,800. And next to it, we put the date March 28th. Then we find the cash account. And on the credit side, we put $1,800. And next to that, we put March 28th. And then we're supposed to compute the balance for each account. So we had the cash account had a beginning debit balance of 21,000. We made a credit entry to it to 1,800. So subtracting the 1,800 from the 21,000, the new balance would be a debit of 19,200. And that would be, we would use the label balance there again. This can be a little confusing with the labels, but the first place where it says balance is the beginning balance in the account. The second place it says balance is our ending balance. Okay, then for accounts payable, the difference between the debit and the credit would be $1,600, and that would go on the credit side because that's the larger side. And then we put the label next to it that says balance. And then office supplies, that's pretty simple. There's only one entry there, so the balance would be the same thing. We would put a balance debit of 3,400 and put the label balance next to it there. Okay, next problem is a trial balance. And most of this is pretty straightforward to prepare a trial balance, but there's one part near the end of it that will be quite tricky that I want to make sure that we have a chance to go over together. So, to organize my work here, I think it's easier to just enter the accounts in the same way they give them to you in the data table. So in the trial balance, the first account that we will enter will be service revenue. Now they tell us that it has a balance of 26,000, but notice that they don't tell us whether that's a debit balance or a credit balance. So we need to know what the normal balance would be for a revenue account. Do you recall for a revenue account, would the normal balance be debit or credit?
Credit.
Yeah, it's credit. If you go back to that diagram with the rules of debits and credits, it goes up with a credit, therefore the normal balance for it would be a credit. So we know that 26,000 goes on the credit side. Then I'll go through these pretty quickly. So then equipment is an asset account, so that would be a normal balance of a debit. Rent expense is an expense account that has a normal balance of a debit. Common stock is an equity account that has a normal balance of a credit. Accounts payable, liability account, normal balance of a credit. Dividends accounts have a normal balance of a debit. Salaries payable, that's a liability account, so normal balance of a credit. Salaries, I'm gonna mess this up. Salaries expense, okay. Salaries expense is an expense account, so that's gonna be a debit. Cash is an asset account, so that's gonna be a debit. Accounts receivable is an asset account, so that's a debit. Interest payable is liability account. And utilities expense is an expense account, so that's gonna be a debit. Actually, there isn't anything tricky about this problem. I was thinking about one that comes later in the book. It must be maybe in chapter 4. So now, if we were add up everything in each of the 2 columns, each of the columns should come to 83,200. Now I have some multiple choice problems. And you can help me to answer these. So, and again, remember that if you're looking at your computer, that answers will be in a different order on your computer than there are on my screen, so it may help to look at my screen instead. Which of the following accounts is an asset?
Service revenue?
D.
Prepaid expense.
Yeah, it's actually prepaid expense, yes. Because an asset, an economic resource that will have value to us in the future, and a prepaid expense meets that definition. Okay, which of the following is the record holding all of the accounts, the changes in those accounts, and their balances? Journal, you say?
Ledger.
Yeah, it's actually the ledger. The reason it's not the journal is that the journal doesn't show balances. It's just a running list in chronological order, but the ledger does show changes in accounts and their balances. Okay, both the chart of accounts and the ledger do what? What statement here would be correct?
C with account names and numbers.
D.
Yeah, I think it's C. Lists the account names and the numbers of the business. Only the ledger would show the increases and the decreases and the balances in the accounts. The chart of accounts doesn't do that, but the chart of accounts and the ledger both show the names of the accounts and the numbers that are assigned to those accounts. Okay, for expenses, the category of account and its normal balance is so here, we're not treating expenses as a separate category of account. We're saying what other category does it fall under or within?
Equity and credit.
You're almost correct. It's considered here to be an equity account, but because expenses make equity go down, the rule for it's the opposite of what it would be for equity in general, which means that the normal balance for an expense account would be a debit balance. Okay, a business renders services to a client and issues a sales invoice. The amount will be collected from the customer at a later time. Which of the following is true at the time the invoice is issued?
Would it be the total liabilities increasing?
I don't think so.
No.
Anybody else?
Net income will increase.
Yeah, should be net income will increase because you record the revenue then, it doesn't matter that you haven't taken the, cash in yet. As soon as you record the revenue, you're gonna have net income as a result of having that transaction.
So rendering a service means you're actively doing it.
Yeah,
Okay.
yeah. Okay, a business performs services for a customer for $26,000 on account. Which of the following accounts is credited?
Accounts receivable.
I don't think so.
Service.
Yeah, service revenue. So, we would debit accounts receivable, we would credit service revenue. A business purchases $1,000 of office supplies on account. Which of the following accounts is debited?
Office supplies.
Yeah, office supplies. We would credit accounts payable. Okay, a business purchases $500 of office supplies on account. What is the effect on the accounting equation?
The office supplies increase and cash decreases.
No,
Oh, it's on.
Accounts
Office supplies
payable.
increase and,
Accounts
accounts
payable
payable increase.
increases.
yeah, right. No cash involved yet, so office supplies increase, accounts payable increase. A business collects cash from a customer for services that were performed 1 month earlier. Which of the following accounts is debited?
Cash.
Yeah, cash. When is a trial balance usually prepared?
Before financial statements.
Right, good. Before the financial statements are prepared. Okay, here's one that involves a little bit of math. The company has assets of $1,300 and equity of $400. What is the debt ratio? Well, they don't tell us what the total liabilities are, which we need to have to do the debt ratio. So we know that if we take assets, 1,300 minus equity of 400, that would give us the total liabilities. So total liabilities would be 900. And so then we take the total liabilities of 900 divided by the total assets of 1,300. $69.23%. That would be the debt ratio.
Hold on 1 second.
Okay? That was the last problem, so that's everything that we had to cover